Hi, Corey Adams CPA, and today I want to talk about the importance of implementing a budget into your business. Now, if you're like 99% of other business owners, you may hear the word budget and be thinking to yourself, oh boy, budgeting may sound great from people like Dave Ramsey and all the other financial gurus, but it's really tough, I don't know, it takes a lot of effort, and it's just not something that I like. And let me tell you, as an accountant who is a big proponent of budgets, I have even a hard time getting myself to have the motivation to go out and do it in my own business and my own personal finances. But what keeps me going and keeps me doing this in my own business and keeps me such a big proponent of using it is the results it gets. So today, hopefully I can provide you with enough compelling reasons to motivate you to start keeping a budget for your business. Now, as a real estate agent or broker, you're likely a commission-based worker. What does that mean? That means that you don't have a salary with a consistent every 2-week paycheck coming in the door. You get paid when you perform. Now, for most people that I work with, that's a great thing, right? We are top performers and we are not capping our income because we're getting paid per performance. So the better we perform, the more money we make. Now, I think any real estate agent can attest to, even though you are a commission-based worker that is making exponentially more than what you could be making on salary, it doesn't all come evenly over time, right? So there are peaks and there are valleys to the commissions that you're earning. There may be a couple of months in which you are earning more than you've ever earned in your life, followed by maybe a month or two of not earning anything due to maybe a changing market. You just have clients who just aren't ready to purchase yet, or the right deals haven't come in place. So there are peaks and there are valleys of your income, and you want to be prepared to be able to afford all of your expenses and afford to be able to pay yourself a living wage during those downtimes the same way that you do during the uptimes. So budgeting can be a really powerful way to take an inconsistent income stream, taking the really high months and the really low months, and being able to create an average over time. That way you're never stuck overspending on the high months and not having enough money to make it through the low months. Now, the second reason why a budget is important to implement into your business is that it's important to be able to track your expenses. So you've heard me talk before in prior videos that everything we do, every decision we make, every expense, really investment that we make into our business is to increase our bottom line, whether that's immediately, a month from now, 6 months from now, a year from now, whatever the timeline is, everything that we are spending money on for our business is to ultimately return more money back to us. And so what we can do by tracking our expenses in a budget is we can hold accountable the investments we're making to bring back and increase our bottom line. So let's think about this example, right? We decide that we are going to invest $1,000 for this month into a certain marketing strategy. And we expect that $1,000 to return to us $10,000 of commissions based upon our market research, our past history, whatever it is, which is a reasonable way of developing that expectation. We can set an expectation of what that marketing strategy is going to do. So we can budget $1,000 of marketing expecting it to produce a result of $10,000 commission. Now, at the end of the month, if that marketing strategy has not performed and produced the results that we have expected it to produce, well, we can see that. We can take a look at what actually happened versus what we budgeted for, and we can hold it accountable. We can make adjustments in the future. We can make adjustments to the process. We can go back and see, why didn't this produce? What do we need to do to get it to produce? Because at the end of the day, our plan and our success is reliant upon holding our dollars accountable in the same way we hold our staff accountable for producing the results that we expect. Because everything we do is to increase our bottom line. So in budgeting, right, we are setting an expectation based on data-driven history, right? Data-driven expectations where this should be performing in a certain way, and if it's not, then we need to get it up to a standard in which it is, and we need to explore the reasons why it's not, because it's harming your business. It's stopping your growth, it's stunting everything you could be doing. Now, it takes some skill and takes some craft and maybe some consulting with your CPA to be able to determine what is a reasonable expectation, right? If we're just trying out a new marketing strategy, I don't know if it's necessarily appropriate to have the highest of expectations unless maybe it was guaranteed from that source or something else. But either way, we want to be able to take whatever we are investing into our business and hold it accountable to producing results. We want to manage our money and tell our money what it's doing. That way, we're not just aimlessly out there spending and blowing our marketing budgets to end up not producing the results that we know that it can produce. So keeping a budget is a great way to manage and hold accountable those investments that you're making to producing more results. Now, another reason why it's important to track our expenses is that we don't want to get hit by any surprise bills upcoming into current month. So who has been there where you're taking a look at your credit card statement, everything looks great, you've got cash in the bank, and next thing you know, you wake up the next day and a couple $1,000 expense is gone. Maybe there was a recurring, a subscription that you forgot to cancel, or maybe you have an insurance payment due or a once a year payment due that you totally forgot about. There's nothing worse than getting hit by a surprise, especially if you don't have the cash accounting to be able to pay that. So one thing that tracking expenses is going to allow us to do is it's going to allow us to really think out what is going to happen this month, what expenses do we have upcoming, what subscriptions do I need to cancel, and do I have enough cash to be able to cover my expenses? Am I in a place where these expenses are not going to catch me by surprise and they're not going to put me out of business? So to recap why using a budget can be so powerful in your business and why you should be doing it is to hold your dollars accountable for producing the results that we know they can, and to stop these surprises that stress you out and are very harmful to your business from popping up on a monthly basis. So reason number 2 why we want to implement a budget into our business is that, putting on my CPA hat here, we want to be able to maximize the amount of tax deductions that we're taking, and we want to do it in a legal and ethical way that can stand up to any IRS audit. One of the key elements of tracking expenses and budgeting for expenses is the fact that we are being proactive. Now, let me tell you guys something. The IRS really loves when people are proactive. They don't like so much when people are responsive. So one thing we're able to do when we're budgeting out our expenses and being proactive and planning for what we're going to spend is that we are making sure that we are ethically and legally structuring our expenses in a way in which they are fully tax deductible. Now, one of my favorite books is called Tax-Free Wealth, and it's written by Tom Wheelwright, who is a CPA for a major real estate investor. And he has a great saying, which is, everything is tax deductible in the right circumstance and situation, right? And so that is such a great saying in the tax world because it's true. Everything that you do can be tax deductible if it's set up in a way in which it falls into the IRS's regulations and is truly tax deductible. So the way that we can plan and make sure that we are as aggressive as we can be in taking as many deductions as we can in an ethical way that can stand up to any IRS audit is to be proactive. We want to get out ahead of any of these expenses that may be hitting and make sure that we have the paperwork, that we have the agreements, that we have the structure needed to be able to take those expenses the way they're supposed to be taken. What I see so often is that a business owner will just kind of have the expense come up. They'll take the expense. Maybe it was for business, maybe it wasn't, but they saw that they spend it. They put it on their business card. They weren't really thinking about it. And then they just go ahead and deduct it all as a business expense. Now, they are the number one person who the IRS, especially with these 83,000 new agents coming in, is going to target to audit, because the problem is that even though it may be on your business card, even though it may be able to be used for expenses, the issue is that you're guilty until proven innocent with the IRS. And so what you want is you want to be able to have those systems in place, those structures in place, and those agreements in place to whereas you can prove that what you did was for a business purpose. It was premeditated, right? We didn't just go out on vacation, accrue these expenses, and all of a sudden say they were business deductible. We planned for them in a business way, and you just so happen to be on vacation afterwards. And we're able to take those and stand up to the IRS to whereas if they ever came to us and sent us a letter or even came and full out audited us, we can turn to them and say, no, here's what we did. Here's the planning. This is why it's a business expense. It's deductible under these certain regulations. Tell us we're wrong. And they won't be able to, because the thing is that the IRS hopes when they audit you that you haven't been proactive, that you haven't put in the structures and you haven't structured your expenses in a way where it's truly a business expense. So by creating these budgets, by getting out ahead and planning for the expenses that we have, what we can do is we can maximize the amount of tax deductions we're taking, and we can minimize the amount of taxes that we're paying into Uncle Sam, because we're structuring things in a way in which we are fully able to take tax advantage of it, take the full write-off, and withstand any type of heat that the IRS tries to bring back on us. So implementing a budget is a key component to implementing an audit-proof and ethical tax reduction strategy. And lastly, carrying on with the taxes, is that a lot of real estate agents, especially when they start making big money, aren't used to the way that taxes are paid when you get paid via a 1099, right? So if you've ever had a W-2 job before, you realize that the amount that you end up getting a check for, the amount that ends up getting direct deposited into your bank account, is far less than the amount of salary that you should be receiving on your bi-weekly or monthly basis. And the reason for that is that your employer is withholding the taxes you owe from every single paycheck. So as you're making money, your employer is withholding taxes for you, and at the end of the year, you file a tax return and you may get a little bit of money back in terms of a refund, or you may owe a little bit. But for the most part, your employer has withheld the proper amount of taxes that you owe. Well, when you move to go work as a real estate agent and are likely getting paid on a 1099, well, you may notice that when you get a check for your commissions, that check comes in with the full amount of the commissions you've earned. And so what that means is that taxes are not being withheld on your behalf. Now, I wish that meant that you didn't owe any taxes, but unfortunately, usually it's the opposite. Usually small business owners get tacked on with even more taxes than the W-2 employee, unless you have the right CPA, right? That's a conversation for another day. But what you want to make sure you're doing is that you're not just taking that check, assuming that taxes have been withheld, and just going out and spending all of it as if there's no obligation to pay tax later on. Too many times I see real estate agents, especially as they're starting to make real money for the first time in their business, they go out, they get that commission in the door, and they won't even be thinking about taxes. And they'll think they have all this money to go out and spend. And next thing you know, they have a huge tax bill due at the end of the year, and they don't have the cash to pay it. They put themselves in a really tough and stressful spot just because they didn't know, they weren't keeping track of how much taxes were due throughout the course of the year. So when you're running a monthly budget, one great benefit to doing that is you can keep track of the amount of taxes that you owe throughout the course of the year. Now, there's different strategies and depending how much money you're making on when you can pay that. But at the end of the day, you can account for how much taxes you're going to owe at the end of the year as your income keeps coming in the door. And you can make sure that you have the right amount of cash saved up. Now, on the opposite end of not having enough cash for taxes, I sometimes see very smart and very great real estate agents who are forward thinking, but may not know everything in depth. They save up a crazy amount of cash and just say, hopefully I'm saving up the right amount. Whatever is due at the end of the year, I'll just pay it then. And the problem with that is that if you are saving up so much cash, which is just an insane amount above what you're actually going to owe, what you're doing is you're robbing yourself of the opportunity to be able to invest that cash back into your business, and you're robbing yourself of the growth that that invested money back into your business could be producing for you. So if you are holding on to cash and hoarding on to cash because you're afraid of what the taxes due might be at the end of the year are, and you're not spending it on those marketing strategies or hiring a new agent or whatever it may be that you can invest back into your business to grow it, you could really be capping your growth for no reason at all other than not budgeting and not being prepared for what your taxes are due, right? And so what I suggest is that you work with your CPA, develop a budget, right, which takes into account the amount of taxes that you're going to end up owing, and work that into your budget. Have it set aside, right? Pay it on your quarterly basis, but don't save too much to where you're robbing from your business. So keeping a budget is a great way to plan for the taxes that you're gonna owe and make sure that you're not under withholding and make sure that you're not over withholding. So hopefully I've been successful in my quest to convince you to at least think about implementing a budget into your business. So if you have any questions or you don't really know where to go next, the first thing is I suggest you download my free ebook in the comments below. That will give you a great framework of financial operations and a great financial baseline to start working off of. And if that all sounds great, you're agreeing with what I'm saying and you're ready to implement what I'm saying and take your business to the next level, so go ahead and schedule a free 45-minute tax and accounting analysis with me. And I'd love to take a look into your business and see what I can do for you. Until next time.